Hey YouTube, this is Zach with Achilles Financial, and today we're going to be talking about Netflix earnings, which is going to be occurring on July 19th. That's this upcoming Wednesday, and they are currently expecting total EPS of $2.85 per share. That's a little bit of a decline from the last earnings where they had $2.88 per share. And then the follow-up to this is that they're expecting revenue to come in at $8.29 billion. Now, this earnings is going to be an interesting one for Netflix because we are following it after a very large drop from the 2021 highs when they started to see decline in total users as well as a decline in revenue at the same time that we saw Disney Plus beginning to really take advantage of their intellectual property or IP and really expand into the marketplace. This caused the stock to drop from nearly $700 a share all the way down to under $200 a share. Now, at this point in time, the stock has largely recovered, sitting at a 2023 high of right at $441 a share. On the year-to-date chart, you can see that this has followed a lot of the broader tech stocks, with the stock really skyrocketing over the course of the past 3 months. So what does this mean for the stock in general? At this point in time, there's going to be a few things that investors should be looking at. One is going to be if revenue is going to continue to grow. So you can see from a total revenue perspective on the past 4 quarters, it's been relatively flatlined. However, we did get initial positive feedback in Q1 when we saw that not only was Netflix going to be introducing a new tier of ad-supported memberships, but also that they were going to continue to crack down on the password sharing of their users. Because of this, the expectation is that while this may not be the best user experience for those that were not buying their own Netflix subscriptions, it did translate to positive user growth and consequently a ad-supported version, which means that you're going to continue to have people leveraging that platform. Now, something that I'm going to be looking at is this cost of revenue line item. You can see that it did spike at the end of last year, but right now there is a large strike going on with the Actors and Writers Guild here in the United States, which means that there's going to be continued friction, and the expectation is that there is going to be an increase in cost associated with producing any Netflix TV shows or movies on a go-forward basis. At this point in time, you can see that the company itself did not have a very profitable Q4, but has consistently had net income north of $1 billion. So there are going to be a lot of moving parts associated with Netflix earnings, but the things that we're going to be watching is going to be income expectations, user growth at both the paid subscriptions as well as the ad-supported subscriptions, and we're going to be watching to see how that performs on a go-forward basis. At this point in time, it's important to note that when we're evaluating this company, that they are trading currently at a 52 PE ratio. Now, that is very, very high. We do continue to see a significant number of these companies are trading at all-time highs or at least year-to-date highs, these companies being tech in general. And the question has to be is, can these companies continue to sustain this growth, especially if we start to see earnings pressure in the event that Netflix does not deliver strong earnings, or if their earnings per share is going to drop more than expected. This could put a lot of downward pressure on the stock that could see it return to below $400 a share. Historically, Netflix has been a big mover on earnings. You can see that on the chart here, that once they've announced earnings, there has consequently been pretty distinct movements as of a given point in time. So that'll be interesting to watch on a go-forward basis. But again, we're going to be watching user growth, revenue growth or decline, as well as earnings per share growth or decline. So we'll be talking about that in the Discord linked in the description down below. And if you find this content helpful, please leave a like and subscribe. Thanks. Talk to you later.